Welcome to Video 9 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. Previous videos in the series provided guidance on how to get started using the software and data entry to build the base case. This video will review how to make recommendations requiring one-time payments from income or assets. In the prior two videos, we looked at making recommendations on the Insurance tab and the Expenses and Liabilities tab. I want to continue with my recommendations, so I will open the existing case where we have been making our recommendations. The recommendations that we made for Insurance and for Expenses and Liabilities have been saved. In many cases, we will have recommendations that require a one-time payment, either from cash or income. Let's look at one-time payments from income first. Since these are payments, we will enter them on the Expenses and Liabilities tab. Let's say I want to make a one-time payment of $1,000 to pay for estate planning documents, and they will pay for it from their discretionary cash flows this year. From the category drop-down, I select one-off payment from income. This defaults to a discretionary expense since it is a recommendation and it will not be included in the calculation of the emergency fund ratio. Let's say that the estate documents are going to cost a total of $1,000 for Mr. and Mrs. Client. We enter our payment amount and we click on Save Recommendation. Now we can see on the right-hand side that our recommendation to pay for the estate planning documents shows up highlighted in gold with the yellow star indicating that it is a recommendation. If I go to the Reports tab and I view the current year income statement with recommendations, we can see down at the bottom that the estate planning documents show up as a $1,000 expense on the current year income statement. If I then go take a look at the year one income statement with recommendations, so what does the income statement look like 1 year from now, you'll see down at the bottom the estate planning documents still listed, but at a payment of 0 since this was a one-time payment. Notice, however, that the recommendations we made in previous videos continue to show up with inflation adjustments where appropriate because they are recurring payments that will continue indefinitely. Now let's go back to our Expenses and Liabilities tab and look at one-time payments from assets. Now in my category dropdown, I'm going to select a one-off payment from an asset. A common situation where you would select this is where the client is refinancing a mortgage and needs to take some money from current assets in order to pay for closing costs. For my example, I'm going to keep it simple and we're just going to pretend that they need to put a new roof on the house. And it's going to be a one-time cost of $15,000 and I want to pay it from the brokerage account. So I'm going to select an expense type of other. And I will just put in a description of new roof to remind me what this is for. We'll put in the $15,000 payment. And now you can see that I also have to select the asset account that it's being paid from. I want to pay this from the brokerage account, so we will select that, and then we'll scroll down and we'll click on Save Recommendation. Notice that after saving, the recommendation shows up on the right-hand side of the Expenses and Liabilities tab. And if I go to the Assets and Savings tab, the software has automatically created a recommendation there to reduce the brokerage account by the $15,000 payment. Now if I click on the Reports tab and I open the current year balance sheet with recommendations, I can see the recommendation listed below the brokerage account and the total invested assets reduced appropriately. If I go to the balance sheet 1 year from today, Notice that the brokerage account title has been changed to indicate that this is the new balance after recommendations. The balance was adjusted for the withdrawal, the 9.77% growth rate applied, and then the annual contribution of $2,000 at the end of the year added to that balance. This concludes our review of making one-time payments from income or assets. In the next video in the series, we will review how to make recommendations regarding assets, savings, and estates.